Hey traders, I'm Steve from Jackrabbit Trader and welcome to another video. In this video we're going to look at all the trades I made for August 2019, go over the winners, the losers, and how we finished the month with about a $1,700 profit. If this is your first time here and you want to learn how to profit from the stock market with a simple process, then you come to the right place. We're putting out new videos every week, so please be sure to subscribe, hit the notification bell, and of course like the video if you're enjoying the content. With that said, let's get started. All right, so as I said, we finished the month of August with a $1,700 profit, and I want to show you how we got there, just so you understand that this is very simple. It's a process that I follow, where we do very little day trading. We're pretty much in these positions for months, if not at least weeks. And you can see that if we look at all the trades that I made that were closed in August, okay, right here, I had some big losers. I had a $770 loser here, $590, $605, and $834, but I had a lot of winners too. And the difference here is that, we are taking profits when we see, when we have them, and we're also monitoring the market. And if we look over at what I consider to be the backbone of my trading strategy, these market cycles, you'll see that early in August we are now trading at a red market cycle. It became red right here at the end of July. And if you're not familiar with them, obviously go over, check out my e-course at jackrabbittrader.com/weekly process. You'll see it also on the homepage, and I'll leave a link in the description box below. But realistically, anytime that we're above or below the 21-day exponential moving average is when we classify it as a green or a red market cycle. So here we closed below the 21-day, triggered a red market cycle, and that realistically lasted most of the month of August. And so our trading is a little bit different in those situations. Instead of really looking for stocks to continue to outperform, stocks to run, we're trying to trade around positions, take profits where we have them, and also use the SPY as a vehicle to not only protect our portfolio, but to get overly aggressive when we feel that the time is the market is in our favor. So again, most of the month of August, red market cycle, didn't change until the end of August. And if we go back to those positions, you'll see that I didn't do very much trading outside of the SPY. We closed a lot of positions, stock positions, but you'll see I have 1, 2, 3, 4, 5, 6, 7, 8 times where we traded the SPY in puts or calls, all right, and those options, and those are much quicker trades, right? 5 days, 5 days, 1 day, 6 days, 4 days, all right, as compared to my stock positions, 57, 78, 127, right? So really at those times, all we're looking to do is stay in the stock positions as long as we possibly can, as long as our stops aren't hit, take profits where we can, anything that is profitable, and that's what we did early in the month, and that's why you'll see a lot of the profits in the beginning of the month. We're taking those profits off the table while we consider the markets and not necessarily be in an environment that we're going to make money from the long side, right? So we want to take the profit off the table. That adds to our profit, reduces risk. And at the same time, we want to go ahead and look for strategic ways to go ahead and hedge and the portfolio with the SPY. So let's take a look at some of these trades. I'm not going to go through the SPY trades because they're kind of sporadic, and but basically what those ended up being, if we go back to the charts and we go to the SPY. So the SPY, we're looking at a daily when we're hedging, okay? And realistically what that was trading between support at 282 and resistance at 294. So when we came down to support, we were buying calls, looking for a pop, selling that pop, came up to resistance, looking for puts, selling the pullback. All right, and we just kept doing that, and we did it a few times, as I said, 6 or 7 times. And realistically, that made my month. If we look at just the SPY trades, we got 470, 250, 394, 268. We got a few down here, 336, 202, 696. So that was almost $3,000 in profit. You can see that all the way down here at the bottom right corner in profit. And again, that's the primary reason that we were able to close the month out with a nice little profit. And you'll see that we had some losers at the end of the month, and going into September I still have losers. You could see my open profit here, 657. I'm still in a losing position. Took a big loss on some puts that we had that we thought we were hedging against, and it's just the name of the game, right? But it is what it is, and we'll go from there. So again, let's look at all the other trades that we made. Those were really the SPY, and I don't feel that those are necessarily the best ways to learn, right? That's not really what our process is based off of. It's based off the idea of the weekly chart and trading that weekly chart to a point where we feel very consistent in doing what we're doing. Okay, so here we have the first one is CF. Okay, and this one was a 200. I'm just looking off to the left here. $294 profit on these shares that I bought early in June. Okay, on this breakout, and ultimately we got a quick move up, and I sold them early in August. Okay, a couple different sales. You can see all the sales right there. I do trade 5 different accounts, so that's why you see so many, but really took them out at around $51, so about a $5 profit, and again, $294. Disney, and actually you guys are going to see these on the right, these trades. Now it's to my left, it's your right. So I have all the trades that I made up there. Disney, again, small profit, $260, and I was in this trade from early April, and you can see I bought it on this breakout, consolidated a little bit, broke out again, and then market cycle changed, and I said, you know what, we have a profit, let's go ahead and take that profit, and that's what we did. Okay, so there's really no other reason, right? I wasn't necessarily looking at any indicator. I just saw money in the street. It's in front of my feet. I'm going to pick it up. All right, I'm not going to walk past it. And that's basically how I trade. It's no more difficult than that. If somebody wants to give me money, I'm going to be more than happy to take it. DHR, all right, so we had 2 purchases here. One looks like early in May, and then another one on another breakout in June. So we talk about how we add to positions, all right? When the market cycle is green, there's times that we want to be overly aggressive. We want to add to positions, and this was one of those times. And again, took the profits a little bit in June, and then the rest off in early August as we started to break down below 139, and again, market cycle change. So again, profits. And you'll see, we had an initial sale in June, but that last piece that we sold was a $96 profit. Okay, not huge, but a profit nonetheless. Microsoft, okay, again, had a couple of purchases, had some sales, and then we bought it back again, new trade. All right, so we took some profits off the table in May, new trade then started in June, and then we sold that again. Market cycle changed, we had some profits, $178 profit. Then we had a few trades in the SPY. Again, you'll see those on the right side of your screen. Hopefully I'm pointing the right way. If not, then it's the other side. DRI. No, that's DRO. DRI. Got out of this trade with a $248 profit. And nothing major here, right? It was a small breakout, and we took about, here we bought at, what was our open profit? We bought here at 117, tried to add to it again, and then ultimately sold on this breakdown. So we averaged in 117, 112, then sold out at 123. And now, if you look at it again, just a little word of caution. Remember, market cycle is green now, and here, if you just take these off, just to show you, this is a new trade. All right, so let's see how we'll see how it holds up going into the end of the week. I'm recording this, it's only Monday, so we have a few days left. But if this were to hold up, then this would be a brand new trade for me and a new entry. So that's just another way to look at things, okay? Just always want to be kind of super transparent. You know, I used to get really tied into rules and exactly this is the exact perfect way to trade. And the more I've done this, the more I realize you want to have a framework, not necessarily rules, and you want to follow those very loosely in a way that makes sense for you. But there is no right or wrong way to trade, you know, and as long as you're making money, then you're doing it right. CHD. All right, had the purchase back here in, looks like May or early April actually. Took some of those shares off. That was in June, and the last piece that we took off in early April resulted in a profit of $164, and not much else to do there. Realty Income, this is one that we continue to sell at resistance. And if we zoom in a little bit, right, so we bought it, we added to it, right, here was the add point, came up, hit resistance, pulled back, hit resistance again, sold some right here in June, came back down, back up, and we said, you know what, market cycle is red, let's take the profits off at resistance, and that resulted in 234 in profit. And you could see here that we now have a breakout and a new trade, and that was sent to members. So if you're not a member, here's my shameless plug. Head on over to jackrabbittrader.com/membership, enter your email address, sign up for my premium membership, and we'll notify you of the next open enrollment period. Then we had E-Trade, big loser. All right, and of course now it doesn't look like such a big loser, but it is. And this was one that we thought was going to move higher, right? It was consolidating, broke out. That was our entry point, and then everything kind of fell apart. And we went from 49 all the way down to 41, maybe even 40, and we took our exit because we were wrong, right? It didn't hold above this 44.86 like I was thinking. Closed below it, closed firmly below it, right around 42. Took my exit, and this was a $830 loss, about 16%. Then again, traded around the SPY for 5 or 6 times, and then a few more that were closed for losers. UNP, right? So remember, in the beginning of the month, we're taking a lot of profits. We have profits. The market's run. Now we're getting into the point where we want to take the profits on the stocks that are obviously showing profits. The other stocks that aren't showing significant profit, we leave, okay? Because maybe they just go sideways while the market goes lower, or maybe they don't hit a stop. We leave those so that when the market does eventually revert back to the upside, we have some chips in the table, chips in play, and that we're not really chasing the market. So what happens is when the market cycle first turns, we are able to take those profits off the table. As the market cycle progresses, you know, unless I'm a great stock picker, which I'm not, these stocks aren't necessarily going to be outperforming the market, so they're going to be losing some money, and then ultimately you're going to end up having to string together some losses, and that's what we're doing here. And you can see UNP, you know, we bought this right around here at 177, came up to 179 eventually, didn't work, closed below 164, which was my stop level. All right, and we got out of that trade. So again, you could see these support and resistance areas in play, and would have loved to see, you know, the market or the UNP. Would love to have seen UNP break out to the upside. Didn't happen. You know, hindsight being 2020, I bought at 177. At one point, I had some profits. Didn't work out. Took a loss on the trade. TSCO, okay, similar situation. Had the breakout, move slightly higher, and then we came down, closed below this 98 level, and we exited the trade. So those were for $605 and $590 losses, and then another big one, Honeywell. Okay, and ultimately it works just with everybody, the same way with everybody else. We broke below support. Okay, got out of the trade, took a $770 loser, and has since just rallied right back in my face, and now is trading, you know, a few dollars more, actually $12 more than where I sold it. So, you know, $12 at 50 shares, it works out to a significant difference, but it is what it is. You can't second guess it. and you just got to trade with what's in front of you, and that's what we did this month. And again, that's how we are able to put together these strings of nice winners and then followed by some losers. So at some point, the market will come around. We've been adding risk to the portfolio over the last few days, or a few weeks, I should say. And hopefully it's not a false breakout, right? Because right now I'm doing this video on September 9th. Market has just broken out and looks like it maybe wants to head back to support, head back to resistance. And we've been adding some risk. So, this is where we got to be careful, where maybe the market then just decides to turn back lower, and we'll see. All right. But for right now, finished August with a $1,700 profit, starting September with a $700 loser, and that was in some puts. And for the year, up $12,550. Not great. Obviously wish I could be up more, but it's profitable, and that's all I really care about right now. So if this is your first time, again, please be sure to subscribe, hit that like button, leave a comment below, hit the notification bell, head on over to the website, check out the weekly process e-course, completely free. Check out our trading library, some good stuff popping up in there, almost weekly, including these videos. Get on the newsletter, do whatever you need to do, but we're happy to have you, and this is a very simple way to trade, so I hope you guys enjoy it. Thank you. Take care.